Joining me here at the NASDAQ, Alan Shaw, the president and CEO of Norfolk Southern. It's great to be speaking with you today. Thanks for joining me.
It's good to see you again, Morgan.
May 9th. We are ticking down to May 9th. Shareholder vote as we see this proxy fight unfold. Just this morning, Glass Lewis recommending a shareholders vote 6 out of 7 of Ancora's nominees, including the picks for CEO Jim Barber and also supporting proposed COO Jamie Boychuk. It's not unprecedented, but it's unusual to see a proxy advisory firm do this with a company of your size. Your response?
Yeah, we vigorously disagree with that recommendation and that conclusion. You know, what it fails to do is take into account the meaningful progress and change that our board has deliberately put forth that is making us a safer and more profitable railroad. You know, we're confident that Norfolk Southern's slate of 13 nominees has the skill sets and the qualifications that far outshine those of the activist slate, and the Glass Lewis recommendation even admitted as much.
Glass Lewis did say that it's a compelling case, quote unquote, for a substantial overhaul of the company's current leadership. It said, quote, "It's not readily evident to us that the company's current leadership has built up a sufficiently positive track record such that investors might reasonably have the patience to allow management to implement a relatively novel operating strategy." It seems like strong statement there.
You know, we've got a compelling strategy and a compelling vision for Norfolk Southern, and it is a balance between service, productivity, and growth with safety at its core, right? And service allows us to pull trucks off the highway. That's the product that we make, and that's the product we sell. Productivity is us managing our assets more efficiently. And Morgan, you put all that stuff together, and that drives growth, and that drives long-term shareholder value creation. And it's working. It has worked. You know, in 2022, my first year as CEO, we had record revenue, and our TSR was the second highest in the industry.
I want to dig into that a little bit more, but first, several unions now comprising just under half of the unionized workforce at the railroad backing Ancora in the last couple of days, including the Brotherhood of the Locomotive Engineers and Trainmen, which flip-flopped after initially backing your team. What is the outreach with the unions right now, and why are we seeing such a division? Because that too seems unusual.
You know, it's clear Ancora is making backroom deals and giving away shareholder value in a situation where they have zero authority to do such. You know, we remain really engaged with our union workforce. We still have the support of 11 of our 13 unions. And Morgan, it was just this Saturday, I and John Orr, our chief operating officer, were in a crew room in Chicago talking to our craft colleagues about our vision, their pride of working for Norfolk Southern, their pride of serving their customers. And it was a great conversation. They were giving us a lot of good feedback on how to make NS more productive and safer. And that's why an engaged workforce matters to our shareholders, because an engaged workforce is a safer workforce and it's a more productive workforce.
You came out with a pretty pointed statement about this where Ancora is concerned this morning, speaking specifically to the BLET. Ancora already responding to it, saying, quote, "We ask shareholders to recognize that current leadership is simply making meritless allegations to distract from its lack of a credible plan and its inability to retain stakeholder confidence, as demonstrated most recently by Ancora's slate receiving an endorsement from Norfolk Southern's largest customer." It does seem like a pretty strong allegation to make that they're making backroom deals here.
Well, the MOU that Ancora signed with the BLET is published on SmartTD's website. Right? It's really clear they're making these deals and giving away shareholder value, which is why they can't be trusted to run a company and a franchise as powerful as Norfolk Southern's, and one that plays such an integral part in the U.S. economy.
Is it in violation of the law or going against the regulatory framework that we see in terms of how these types of deals or negotiations can be done?
Yes, we believe it's in violation of the Railway Labor Act. Okay.
Cleveland Cliffs, largest customer, casts a light on service times. You just talked about it. Q1 delivered 86% of shipping containers, about 76% of all other goods on time. You're forecasting improvement in Q2. Your nearest peer in the East, CSX, does already have significantly better service times. How do you catch up? How do you get there?
You know, we're making great strides in our service product. We have undergone a number of operational changes since last fall. Most recently, hiring of John Orr, a 40-year industry veteran who's had immense amount of success installing PSR on 3 different railroads. And right now, over the last 30 days, I'm seeing our our train speed is up 10%. Our terminal dwell, the amount of time cars sit in our terminals, is down 10%. Our intermodal service product is the best it's been in a decade, and our merchandise service product is the best that it's been in a couple years. And as a result, a couple of weeks ago, you saw an independent survey of our customer base saying 80% would pull business away from Norfolk Southern if Ancora came in and changed management and changed our strategy. 86% of our customer base said they were aligned with our management and strategy. You know what percent said they're aligned with Ancora? 0. We're delivering a really good service product to our customers, and our customers are seeing it, and they're awarding us with new business.
So you're seeing an increase in market share?
Yeah, we are seeing an increase in market share. If you look at our intermodal franchise and our coal franchise, we're doing very well there, and our merchandise network is speeding up.
So this raises the question, how do you drive down costs, increase profitability, essentially lower your operating ratio, which for better or worse is the industry metric and certainly the one in focus in the midst of this proxy fight. You forecast getting to 64 to 65% in the second half, Q1 69.9% adjusted. Lower is better when we talk about OR. How do you get there, and how do you counter Ancora that says they can get lower faster?
You know, we've got a responsible plan. And it's a balance. We're going to get to the same place, and we're going to get to a sub 60 OR in the next 3 to 4 years by safely balancing service, productivity, and growth. We'll take trucks off the highway with our service product. We're really focused on productivity right now, and with the new leadership that we have in operations, we're confident we're going to deliver a 400 to 500 basis point improvement in OR in the second half of this year. Morgan, you were with me in the aftermath of East Palestine. You know, you were on the ground with me, and you heard me make promises to really focus on safety and really focus on service. And we kept that promise. We did just that. Our mainline accident rate declined by 38% last year. Our service improved to the best it's been in a number of years. That's created, in a safe manner, the platform to drive productivity this year and the foundation for growth, which drives long-term shareholder value.
So how do you keep safety front and center? And given the fact that you did have this high-profile train derailment, East Palestine last year, that you are continuing to recover from, with a recently announced class action settlement, is that in the rearview mirror?
You know, we'll continue to do the right things in East Palestine. I'll continue to go back and engage with the community. But what that does is it takes a lot of the financial exposure to our shareholders off the table and reduces the tail risk of this. It was the right thing to do. It was the right thing to do for the community. We've made a number of promises there, and we've kept every single one of those promises.
So how do you balance safety in an environment where you're also looking to improve those financial metrics?
Oh, I firmly believe that discipline to run a really efficient network is the same discipline to run a safe network. And before we hired John Orr as our Chief Operating Officer, we looked at his performance on safety and on service on the previous roads in which he's worked. And he's got a resume unlike any other Chief Operating Officer in the industry. And so we were able to recruit him. And Morgan, our ability to recruit someone of John Orr's caliber tells you what the rest of the industry thinks of our strategy.
And so in terms of the PSR piece of this, the precision scheduled railroading piece of this, that is very much what the activist investor playbook is focused on, is implementing that sort of in its classic sense. You've called it PSR 2.0, if I'm correct. So how are you approaching that?
Yeah, we've been operating a PSR operating plan since 2019, right? That is an operating plan. It's different than a strategy. But we've been doing that since 2019, and it's delivering really good results. The difference is in the implementation and the application of it. You know, the Ancora COO said he would tear Norfolk Southern down to the studs. That's not safe. That's not responsible. We're doing it in a manner that brings along our customers and our shareholders and our employees and our regulators. And that preserves the opportunity for long-term growth. That's the winning strategy. A short-term erratic approach is a losing strategy for our shareholders. Ours is the winning strategy.
The fact that you are dealing with this proxy contest, is it taking away from your time and energy to run the railroad, or is it actually sharpening and enhancing it?
You know, you can look at a crisis in a number of ways. We look at crises as things that can help us accelerate change, and we're doing just that at Norfolk Southern. We're making changes to our operations. We're continuing to execute our strategy. We delivered safety, we delivered service last year. We're growing in our most service-sensitive markets, and I got a lot of confidence on where we're headed because we've got the right leadership team, we got the right strategy, and we got the right franchise.
So based on my reporting, Ancora offered the board chair, Amy Miles, over the weekend a settlement offer. It involved replacing you with Jim Barber, putting Jamie Boychuk in a senior position to current COO John Orr, a reconstitution of a sizable minority of the board, and also the replacement of that current chair after the annual meeting. It was rebuffed. Is there a possible path to settlement?
Yes, there is a possible path to settlement. We continue to openly engage and hope for a settlement, but I'll tell you, everything that Ancora has offered would require wholesale change to the board and to management. And our board firmly believes that that's not in our shareholders' best interest.
As we do tick down to May 9th, you're traveling, you're meeting with shareholders. What has the feedback been, particularly from institutional investors, which are going to have such a big say through this vote process?
You know, our investors like our strategy, and they see the improvements that we're making. You know, candidly, they're doing the math, and they're looking at Ancora's math, and frankly, it doesn't add up. And so there's a lot of concern on our investors' part about the credibility of Ancora's plan. We've got the right strategy for Norfolk Southern. We're delivering service to pull trucks off the highway. We're driving productivity at Norfolk Southern. Put that together, that drives growth, and that drives long-term shareholder value.
I'm going to ask you the same question I asked Jim Chadwick of Ancora a couple weeks ago. What does success look like, especially since it's not an either-or scenario? There are a variety of ways this could potentially play out when shareholders vote.
You know, for us, success is driving long-term shareholder value, and then it's doing it in a safe and responsible manner. And there's only one vision that does that, and that's our vision, to balance safety, productivity, and growth, and drive long-term shareholder value. We're on the right path. We've got the right leadership team. We're focused on productivity, and we're targeting 400 to 500 basis points of productivity in the second half of this year and a sub-60 OR in the next 3 to 4 years, and doing it in a responsible manner that brings along our customers and our employees and our shareholders and our regulators.
Alan Shaw, CEO of Norfolk Southern, thank you for joining me.
It's a pleasure to be here, Morgan.